And the US stocks closed lower on Tuesday but reduced the scale of their losses earlier in the session as a threat of fresh US tariffs, along with hopes of a possible peace deal between Ukraine and Russia, fueled volatility. The S&P 500 index dropped as low as 5,528.41 points, falling more than 10% during the session from its record closing high of 6,144.15 on February 19, which is commonly known as a market correction.
On Monday, the S&P 500 recorded its most significant one-day drop since December 18th, wiping out just over $1.3 trillion in market value and a staggering $4 trillion from its recent peak. The tech-heavy Nasdaq confirmed a 10% correction late last week. But stocks gained some momentum after the US agreed to resume military aid and intelligence sharing with Ukraine immediately after talks in Saudi Arabia, in which Kyiv voiced readiness to accept a US proposal for a 30-day ceasefire in its conflict with Russia, the country said in a joint statement. Adding to the positive momentum, Ontario's premier said he had agreed to suspend the Canadian province's 25% surcharge on exports of electricity to Michigan, New York, and Minnesota. Trump subsequently said he was now looking at reducing tariffs on Canada. The S&P 500 lost 0.76% to end at 5,572.07 points, while the Nasdaq Composite 0.18% to 17,436.10. The Dow Jones Industrial Average fell 1.14% to 41,433.48.
The Trump administration has some big goals. They probably should have started with the short-term gains, which would have been, in our opinion, an extension of the tax cuts in 2017, and also, some lighter regulatory touch. Instead, they've gone after the long-term structural goals first, which are kind of rebalancing U.S. trade and also trying to get more private dollars into the economy versus government spending. That is very difficult to do. It's going to take a long time. And so that lack of certainty in the market is really kind of paralyzing consumers and businesses.